GoldMindTrading, episode 4 of our video series on mastering the market structures. Because I told you, if you cannot understand how to read market structures, it will be hard for you to trade forex. Probably this could be the reason as why you are not consistently making profit, because you have failed to master the market structures. Mastering the market structures is like mastering the language, the reading map of the market. You'll be able to know what the market is communicating, where the market is moving from, where the market is, and probably anticipate where the market will be heading. So guys, if you have already watched the previous episode and you are finding value in this video series, please remember to subscribe, because I will keep dropping this lesson. By the time we finish the whole thing that you have to know about market structure, you will be expert in reading the market and understanding the language of the market. In this video episode, I will be explaining the major 3 types of market structure, and that is the swing structure, the internal structure, and the fractal. This applies to everyone, whether you are a swing trader, you are intraday, or a scalper, because if you don't understand this structure, you always be stopped out. Anytime you enter the market, you find yourself being caught on the wrong side of the market. Good, let's dive in. What you need to know about this market structure? Number 1, you need to find out the swing point. I'm going to be drawing everything on this chart. We have a swing that is the external or the overall structure. Previously, we talked about the trending of the market, which is sometimes in the down or the upward trend. Now, the swing structure is the overall or the external structure of the market. For example, here you see this point. This point here, this is a swing point. A swing point, a high-low point. And this is a swing point. It's a big swing point. A high point. And this is a swing point. And now the market moved. This is another, after this break of structure here, we see another, which is a high point. Now, this is the overall swing leg of the market structure. But remember, from our previous video episodes, we say that after every break of structure, we always expect a pullback. This is an internal break of structure. I'm going to talk about that one. Now, after the break of a swing structure, we are seeing a pullback. The whole of this one is a pullback. So the market pulled back from another swing point here, which is a high-low point. Right. So you see the market move. So from the swing point, it moved 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 and formed a swing point. That is the overall external market structure. Good. What do we need to understand now? Oh, sorry, sir. Okay. So after the market forming a swing high, as you see here, we expect a pullback. Now you see the market came here, it formed this swing point, a high point, it formed the swing low point, high-low point, it formed this point, and it made a little retracement, which I can term as an internal structure, and broke the internal structure of this point and formed another point here. Then it made it can be probably like one kind of very little retracement. It moved high. Then we see now the market is retracing back. We see a change of character, what we term as chalk. We see a very change of character here. So on this change of character, we are seeing the market is making a chalk, what we call a change of character. A change of character, this may signify that the internal structure pullback is starting. This could be our first signal that the internal pullback is starting. But now, how do we confirm when we see this break of structure? You see, this was the high low of internal structure, but now the market came and break this structure here that you see, break of structure, this point, break of structure, break of structure. Now that is an indication that the internal pullback might be starting. Break of structure, right? The internal pullback might be starting, and also the swing pullback might be starting. So what do we expect? This point that causes a break of structure, we expect it to hold. We see the market is coming back into the premium zone of, or those who trade supply. It can be a supply zone or the premium zone of the Fibonacci retracement, and we see the market is continuing to break another structure here. And from our expectation is the market to continue, the internal structure to continue bearish and breaking other structure. We see the market retracing back and breaking that structure. We see them making a slight retracement and now causing a chop. This might be our first signal that the internal pullback might be ending, or the swing pullback might be ending. That would be our first signal. We see another chalk here, and we see a break of structure. We see another chalk and a break of structure, a bullish break of structure, upward break of structure here. Now, that is a confirmation that the internal pullback or the swing pullback has ended. Now we expect the swing continuation or the internal continuation. So we always wait for the market to return into our discount zone or into our demand zone, then to start looking for trades. This is a high probability. All trades that are taken in the direction with the external structure tends to be high probability trades. Now we see a chalk, and the market continues to break structure. Now the internal structure and the external structure aligns in the same direction. This makes it to be a high probability trade. If you're looking for the setup, you can start getting into the market and hitting your take profit. Now for those who like to swing, they can swing the market from this point, because our expectation is the market to continue breaking structure and moving high until it break our previous swing high point, and then we can now start expect an internal structure to start forming back, internal pullback to start now forming back, forming structures and continuing to with the trend. Guys, this was just a theory, but let us find it on the real market. This is a screenshot which I took on Euro USD. I told you that market structure applies in all types of the market. Whether you are trading commodities, whether you are trading Forex or crypto, the market will always move in form of market structures, upward, downward, or in a side-by-side or consolidation. This is a 4-hour chart, Euro USD. Let's start identifying our swing, our external structures. Good. Let me start from this point here. You see this point? Good. The market came, it broke, it make a small retracement that I consider as internal pullback and broke this structure. Now we see that the market is coming and forming a choke and a break of structure here, what they call as BOS. Now, after breaking this structure, I probably think that the internal pullback has started. We see the market continuing to break structure up to this point, which can be a discount zone of the premium Fibonacci retracement. Now we see the market making choke and breaking structure here, and the market continues to break structures until it breaks the structure of our previous swing high point. This was swing high point, and this was our swing high low point. So after breaking this structure, we see the market starting to retrace back and breaking other internal structure, which we call internal BOS. We see the market coming and the market making a change of character and continuing to break structures until it take off this previous high point. And this was a high, we could label this one as a high low point. So we see after taking the previous high point, we always expect a pullback. We see the market breaking the structure, the market breaking the structure, the market breaking the structure. Guys, if you can understand this and practice, you go on your chart, open trading view, and start finding the swing high, determining the swing high, the swing pullback, the internal structures that is forming within the swing pullback or the swing continuation, and those choke that it can help you to find a high probability setup which can actually improve your win rate and probability. So this is the end of our episode 4 of the video series. I'll keep dropping more episodes about the market structures, and I will deep into more other complicated concept about trading. If you find this video with value, don't forget to subscribe, like, and comment so that you may not miss the other upcoming video series.